Hello, good day everybody. Welcome back to our indicators class. Last time we talked about the moving average. We also talked about the envelope and the Bollinger Bands. So today we're going to discuss about the other parts of the indicators, which we already know or talk about. We said the indicators are divided into three aspects: the trend, oscillator, volume, and B. Williams. So we talked about the trend last time. So today we are going to be focusing our time on the oscillators. So firstly, oscillators is a new word to those that are just starting. Oscillator means something, and talking about oscillator for beginners, oscillator is a term derived from electronics. It talks about movements, electrical movement, and conversion and repetition. These are just the basic things you need to know about the word oscillator. So oscillator basically is just it's an electrical term whenever you hear the word oscillator. So when you talk about oscillator, we're talking about some sort of energy, some sort of energy of motion, like those of us that are doing science, like the kinetic energy. So an oscillator is an electronic circuit that converts direct current. I'm trying to tell you about the basic meaning. So oscillator is an electric circuit that converts direct current into an alternative current. Do you get that? Yes, it converts a direct current. The oscillator as a word performs a task which involves converting. So as an indicator to the financial world, the oscillator gives you a sign. The oscillator gives you a sign or a signal to follow in a certain period of time. This signal that is converted for you to use is for a short period of time. Don't think the signal is there to last, so you have to catch the trend, you have to do this. There are some certain things you need to know about an oscillator and how you can use the various parts of the oscillator in this oscillator, in this oscillator column. As you can see, there's a lot of there are different types of oscillator here. We have from the average true range. There are so many types of oscillator there, but there's one thing you need to understand, that it's converted for you to use for a short period of time. Now these signals that the oscillator gives to you is for you to apply them, to either to use them to buy in the market or to sell in the market. But it's not forever, it's for a short period of time. So these good signals in a trendy market, because the only way a trader can really profit from the foreign exchange market is when you use a good signal, when you make good use of a good signal in a trendy market. Because to become profitable as a trader, you have to understand that you need to join or participate in a long-term market movement, depending on your time frame, depending on the kind of time frame or preference that you are working on. Now, to talk about the indicators, the oscillator indicators, you just have to come to the place. You see there's a lot of indicators here: average true range, bear power, bull power, commodity, channel, D marker, force, a lot of indicators. as you can see them on the screen. But in today's tutorial, we're just going to talk about some of them. We're not going to choose every one to talk about here. We're just going to talk about some of them. So talking about them, we're just going to choose a few of them. Like when I was still learning forex as a beginner, I really loved using the stochastic oscillator. Let me choose this one. As you can see, it has its own perimeter, just like we discussed in our previous lesson in the trending part. But this is our oscillator, the stochastic oscillator. We already know the meaning of oscillator. Click on default. As you can see, the perimeter is here and the levels are here. So you click on default, click on save. Automatically it's going to show in the indicator window, close to the main chart window. So if you go back, you see automatically it's already here down on the charts. Now as you can see, I already took a trade, but I didn't take it using the oscillator. But now that I've added it to my chart, it's signifying me that it's moving to where I predicted in the market. But moving on, talking about the stochastic oscillator. At first, we already know what an oscillator is. So now we're going to talk about the stochastic oscillator. Now, at first, what is stochastic? Stochastic. What do you understand by stochastic? This is a main question which you can always ask yourself each time you hear of something new, so that it can help you understand better. So stochastic, for its word, refers to any process or variable that is randomly determined by chance. A stochastic oscillator is a momentum tool in technical analysis that compare an asset price opening and close in a specific period of time. So as you can see, you have other type of oscillator here, but today we are just gonna talk about stochastic and some few others. So let's go back to our chart so we can talk about stochastic. As you can see, it's already here on your screen. If you click on the eye, maybe you want to view a bigger part of the chart, you can just click there, then it will go out of the chart view. Then if you need it back, you can just simply come back and touch there, and that's it. So the stochastic, for beginners, we're just going to stick to the basics so that we can meet up with everything that you need to understand about the stochastic indicator. So moving on, the stochastic indicator, as we already know, is a momentum. Now what is a momentum? Momentum is all about movement. When you hear the word momentum, we're talking about movement from one place to the other. So that is what the stochastic is, but not just any form of movement, like a trend movement, like a consolidation movement, or whatever type of movement we're talking about. But we're talking about real movement that can, make you some money when you follow through the due process of how to apply the stochastic and when to apply the stochastic to your chart. So now that the stochastic is added to our screen, as you can see, it has two features here. The red and the green lines. Also, if you look at the lines that they are under, the vertical lines, you see 80 and you see 20 below. You see 80 above, then you see 80 in 100 above, sorry, you see 0.01 below, 20, 80, then 100 above. Now what does that mean? Those of us that understood a little bit of science, you understand when we talk about movement and we are referring to 100% movement, 80% movement, 20% movement, and 0.0% movement. Now over here, the stochastic movement ranges from 0 to 100. Just like I already said, it scales from 0.00 to 100, which signifies a daily movement or momentum from the upside to the downside, or from the downside to the upside, vice versa. Now, according to what the general public knows, or according to what a lot of people know about the stochastic, according to what the general public knows, a reading above 80 suggests the assets may be due for price drop. They always signify that when it's stochastic, it's trading above 80. Now, just like as we can see on our screen here, the green line and the red line, they all went up. They didn't trade above it so much, but they actually touched it. Now, if you're talking about momentum, if you're talking about speed, it simply means that they have gotten to a higher, or to the highest point of the market for that day. You'll be surprised what it means, because when you talk about the stochastic, we're talking about movement, momentum. Now, when it's above 80, according to the general knowledge, that is it's overbought. It's overbought. Now, while if it's below 20, they refer to that as an oversold. A reading below 20 suggests the asset may be due for price increase. Basic use and terms. A reading below 20, right here, right in this place, it's oversold. Now, those of us that are scientifically minded, what does that say? What does that tell you about momentum? It tells you that whenever a price, or the stochastic, it's down here in this 20, it is a best time to be looking for a buy. Why is it the best time? Because it's an indicator telling you that this market is already down. It's already down, suggesting to you that anytime from now it can start going up. It can start going up. Now, if you take this arrow cursor, if you take it and move it along this stochastic window, you see all by yourself that it ranges from 80 down to 20. What does that tell you? That tells you that there are some markets that are not bullish. There are some markets that are bearish. Now, for you to be able to recognize this market, you have to understand the position of the stochastic, to what the market is saying. I believe some people understand that stochastic gives signal. Now, these signals that it gives might not be consistently correct, but it creates this signal for what? For a reason. And as you study deeply, you will get to understand this basic usage of stochastic. So as I was saying, if the stochastic line is up 80, is signifying a potential sell, a potential signal that this price has gone too high. It's expected to come down. That is the basic knowledge of stochastic indicator when it comes to using it to generate a signal, a buy signal or a sell signal. So with the help of this momentum move, those of us that understand science will know that the momentum always starts from zero. So that's why, as you can see in your stochastic windows here, you see it starts from zero. Now when an asset starts touching zero, that's to tell you that there is no more room to sell. You have to be patient to see or find a buy signal to go long, the one that is generated with momentum, not just that because it's down here you just start buying. No, you need to see a shift in the market from the downside to the upside, which will also be represented in the chart that you are using it for, or that you are using it to trade. So moving on, so with the help of this momentum move from 0 to 100 and 100 to 20 or to 0, it gives trader opportunities to buy and sell. In other words, the stochastic generates buy and sell signals for a certain period of time. The action and control of this momentum is done with the help of what? Of the market, because when the stochastic is going down, the market also gives you a momentum move, big candles, which you can capitalize on in order to get the right move. So this stochastic action, it keeps repeating itself over and over again, just to give you a sell and buy signal. So when you become a professional trader, you can only use it to be sure or to know where to buy from and where to sell from, or where to exit from the market. So that is what you need to understand about the basic input or the use of a stochastic oscillator. Now, as we are talking about oscillator indicators, there's one thing that should come to your mind. We are talking about movement, momentum. Those are the things that should come to your mind. That's why you see the word oscillator, talking about conversion of energy. Now in the business world, it's is a conversion from the buy side to the sell side within a specific period of time. So moving back to the oscillator menu, we have other ones to talk about. We have the bears, the bulls. Even as the word implies, we already know what that is. But let's talk about the other ones, which which is in a relationship with the stochastic oscillator. So we are looking at the next one, which is relative strength index, the RSI. Let's just put it at default. I like putting mine in default because I have a feeling that the default is for a purpose. So it was created like that in MetaTrader 4. So when you come, you can do some settings to suit your style of trading. Here in the perimeter, you have period 14 apply to closer to the market time frame, or just like that, the line style. You can choose whatever you want, but I actually like putting it in default because I feel it's more accurate that way to my style of trade. Now, the RSI has been added to the screen. The RSI, as we all know, relative strength index. Don't get it too confused. It's written here, as you can see, relative strength index. Now let's come back to the chart. The RSI is a little bit different from the stochastic, but they are still talking about momentum. Everything that you need to understand about this oscillator window, which is under the main chart, you should know that they are always giving you a reason to understand price conversion and price movement from the highest point to the lowest point, or from the lowest point to the highest point. Now, the relative strength index is a momentum indicator used in technical analysis to measure the speed and magnitude of recent price changes. It is basically help traders identify overbought, oversold, and market retracement and trend reversal. So every of these things on the oscillator menu have its own purpose, has its own use. You know, the oscillator indicator has a lot to offer whenever you're looking for momentum in the market. So moving on to RSI, if you're making use of the RSI, there's one thing that should come to your mind, that it's also scaled from 0 to 100. The RSI oscillates on a scale from 0 to 100. It is typically calculated based on your preference time frame. So those of us that like going to lower time frame, we can have our own oscillator there using basically all time frame. You know, so if you always have other time frame reference, there's one thing that should come to your mind. Just like the stochastic, the oscillator appears on all time frames too. Just like the stochastic also appear on all time frame. So if you check here on under your chart, you will notice that the RSI, it's on your chart, which is labeled 70 to 100 and 30 to 0, with some kind of a bigger space compared to the stochastic. Now, what does that mean? It's just basically the same or almost the same meaning with that of a stochastic. That also signifies a trade above 70 to 100 to above 100 is an oversold, while from 30 is overbought, while from 30 to 0.0 is oversold. Now, what does that mean? It still calculates, or it still means that it is calculating higher price from 100 to 0 and lower price from 0 to 100, telling you when the price is overbought and when the price is oversold in the market. Now, a retracement of a market can also be identified using the RSI. You know, as the name implies, relative strength index. This tells you the strength of a trend, the strength of a market in a specific direction. Remember, we talked about an oscillator, which is also a momentum, and we talk about kinetic energy. Those of us that do science will understand that an energy that is already 100% has a probability of dropping down. So an energy which is kinetic energy that starts from zero has the probability of going up or going high, you know. So any energy that is movable that starts from zero has a probability of going straight to 100 or 50 or lesser than that, depending on the move of the matter or the weight of the material. You know, back to the trading aspect. So the RSI here, whenever the RSI, as you can see it here on the screen, it's above 70 to 100, we are looking for shorts. We are looking to short the market. But a situation whereby it's not up to that yet, but your analysis tells you that the market will go down, then you have to understand that the market is either retracing, looking for a short, just like as you can see here on my screen. This is a retracement market. It's barely above 50, so you cannot call this market a bull market because it's barely above 50. Now, as you can see on my chart, it's retracing back, and I'm making use of the relative strength to short it because there was no bullish trend here. Now, the relation between this day and the previous day gives me the alternative to short the market. As you can see, we are already in profit. Now, that is all you need to understand for the basic of relative strength index. But there are other things you need to know, but for this class, that's what we'll talk about for relative strength index. Now, moving on to the other ones under the oscillator, we have the bear and the bull. Now, each one we are going to talk about, they all gonna be referring to momentum. It's always about the momentum when you talk about oscillator, the speed at which things is being converted, you know, just like in the definition which I gave you already. So that's how it all implies here in these indicators. Now, if you come to momentum, if you click on momentum, you just say save, come back here, you see to yourself that there was a momentum in this market, but not a very strong one. You see that? Not a very strong one. Now, if you check in our previous day, in our previous chart, which is this one here, you see how the momentum reacted to the indicator and to the market. So with this basic knowledge, you need to understand that each time you are dealing on oscillator, you are looking for momentum in the market. Now, I know a lot of people will be asking, why did you short this market? Did you not see it's going up? Of course it is, but there is no momentum in the candles of this chart. So for that reason, I cannot be looking for a long or a bull market unless I see it. And when I see it, I can leave my my bear market to face with the with the bull market. So there are a lot of indicators here when it comes to oscillator. You know, as time goes on, you get to understand, because each indicators here under the oscillator have their own specific way of interpreting momentum in the market. So you cannot overthink it. You just have to understand them one after the other and know when to apply them. You don't just apply them because you feel it's flowing with the market. No, you apply them when you understand them. If you talk about bear power, if you click on there, you click on save, immediately you understand that it's still talking about momentum. In the bear power, you just see a three-dimensional difference from the minus side down and to the plus side above. This already tells you that if you are using the bear power indicator, you are only looking for shorts in the market. You are not coming to look for longs. What you are looking for a short in this market. You know, when the price of the market starts to fall within this price of your oscillator, immediately you understand that momentum is shifting from the upside to the downside. So that's how it applies in all these basic oscillators indicators that is in our chart. So there's a lot of things we can keep talking about, but we'll just try our best to make this video short. The video short. Now moving on, you see a lot of indicators here in under the oscillator, so you can choose whichever one you're comfortable with. Now a lot of people that already know about the trend indicator and the oscillator, most of them like combining both of them together in order to get a trade. For instance, we are putting the moving average in the market, then you are now adding one more oscillator, because the moving average is for trend. You are looking for trend. Okay, agreed. And you now add an oscillator like maybe the stochastic oscillator, for instance, which I used to do. I'm guilty of it as a beginner. Now what I'm trying to look at here, I'm seeing that the moving average is consolidating, as you can see in the market here, but the oscillator is going down, telling us that we still have some percentage here to to earn from this market. Are we seeing that? But it hasn't gotten to the oversold area yet. Do we understand? Now, but in the moving average, it's telling you that, oh, the market is moving, it's underneath me, but it hasn't started trending yet. That is what the moving average is saying. So with that being said, it is sometimes not advisable to be using more than one indicators on your screen unless you understand them better and how to use them effectively in the market. So with that being said, I will come to the conclusion of the oscillator class, so that the video will not be too long. So in our next class, we are going to talk about other indicators like the volume and the B Williams. The volume has a little topics, so we're just going to talk about volumes and B Williams in our next class. So thank you for watching, and I look forward to see you all in our next class.